So I believe many investors have probably forgotten about this one critical fact about Alibaba. So indulge with me in this thought experiment and maybe participate in the comment section down below as well. So today, if I were to ask you straight in your face, what industry does Alibaba actually operate in? Or what type of company is Alibaba? Spend some time, maybe take the next 3 seconds and comment down below. Intuitively, many of you probably will write, oh, Alibaba is definitely an e-commerce company. In fact, to many US investors, they deem Alibaba as the Amazon of China. But if you were to really scrutinize it, in my perspective, yes, I do agree that on the outside, Alibaba seems like an e-commerce company, but at its core, at its substance, Alibaba is in fact an advertising company. And I think just to prove my point, just look at it in terms of the digital advertising revenue market share across the globe. So the cream of the crop is definitely Alphabet and Meta platforms. So those two are your traditional advertising company. And want to take a guess who's third in position? Yes, it's Alibaba at 9.5% of the entire global ad market share. So think again, is Alibaba really an e-commerce company, or is it an advertising company masquerading as an e-commerce company? So I think to further illustrate my point, I think I just wanted to take an accounting perspective. Don't worry, I'm not going to fool around with many of the numbers. I just wanted to emphasize on this perspective that substance is more important than form. And of course, I will leave it to the end of the video to explain why is it important to look at Alibaba from the lens of it being an advertising company versus an e-commerce company. So quickly just hazard a guess. How big do you think Alibaba's e-commerce business is? So for some of you who haven't really been studying the company, you might think that, hey, Alibaba is probably smaller than Amazon. I mean, who can beat Amazon? Amazon is like the largest retailer or the largest online retailer in the world, right? Wrong. So technically speaking, in terms of GMV, so GMV means gross merchandise value, essentially the number of products that they move on their platform itself specifically, you can see that Amazon, at least in 2022, according to Statista, they've moved around $368 billion worth of products in the year 2022. And that's definitely a feat. But I think to just quickly humble you, just take a quick look on the left of Amazon and just look at the two different platforms. One, it's called Taobao. One, it's called Tmall. Both platforms are actually owned by Alibaba. So both their numbers are technically subsumed under one company, which is Alibaba in this case. And you might just want to do a quick addition. Both platforms have moved a total of 1.3 trillion US dollars in terms of gross merchandise value. And Amazon moved around $368 billion. So that's essentially 4 times. And yes, despite Amazon having a $1 trillion market cap and Baba is probably trading nearer to 300 billion, they're moving 4 times the amount of products. And of course, there is a good reason why. Let's not go into the specifics of whether is it a Chinese versus US company. And yeah, Amazon's AWS business arm is a lot more superior and a lot more dominant in the entire cloud computing space. But that said, I think just comparing on the e-commerce business and e-commerce segment of both companies, you can see that Alibaba is clearly dominating in this entire space. But I think the very interesting fact on why I want to look at it from an accounting perspective is really how each individual companies actually recognize their revenue. So I'm also going to throw in JD.com and Pinduoduo to really just to give you a flavor into understanding what's the fundamental substance of the different companies. So firstly, let's focus just on Amazon. I'm going to eliminate the AWS segment because I don't really want to talk about the other business arms, but really just focus on this e-commerce business. So I'm referencing the earnings report from 2022 because these are 2022 figures to kind of make it consistent. So as you can see for NA, which is the North America segment, in terms of the net sales, for the 12-month ending December 31st, 2022, they moved around $315 billion. And for international, it's around 118 billion. So if you just quickly add up in terms of how they recognize their top line revenue, it's around 430 billion dollars, US dollars. So just keep that at the back of your mind. So similarly for JD, for the full year of 2022, the net revenue for the full year is around 1 trillion renminbi, which makes up around 151 billion US dollars. So back to it, GMV in terms of how they calculate their revenue, they did say that JD around 247 billion, Amazon around 368 billion. So for Pinduoduo in 2022, they recognize a total of around 19 billion US dollars. Even though, if I'm not wrong, based on my recollection, in terms of GMV, they are much closer to JD.com. Yes, albeit smaller, but they are still relatively competitive and they are moving an equal number of products. So Pinduoduo, 19 billion for one whole year, JD 151 billion for one whole year, and Amazon 420, 430 billion in one whole year. So now, looking at Alibaba. So Alibaba in this case, it's slightly more peculiar because their earnings is, they report their financial year and they end it on March of every single year. So it's very hard to take a proxy in terms of how much they've done. But in terms of the 9 months ending the December 31st, they recognize around 446 billion renminbi. This is not USD. And international commerce, they recognize around 50 billion. So total, you can probably count it to be around 500 billion, give or take. So if you were to take the March quarter, which is that 1 year, to kind of illustrate the entire year's revenue turnover, China commerce for the year ended March 31st is around 582 billion. International commerce is around 69 billion. You add them up, it's around $650 billion renminbi. So in order to convert them to have a better conversation and to have better consistency, dividing $650 billion yuan to US dollar, that's around 90 billion. Yes, you've heard it right, 90 billion US dollars, yeah? So to just draw the comparison again, Amazon commerce segment add up together, it's around 430, Amazon 430, JD 151, Pinduoduo 19, and Alibaba 90. So yes, Alibaba is actually recording revenue that is probably only 2/3 of what JD is recognizing. 2/3 of what JD is recognizing, and JD's GMV 247 billion, Alibaba 1.3 trillion dollars. That's 1/4 of what Alibaba is moving, yet Alibaba has 2/3 of their revenue. In this case, simply put, it's really just a different revenue recognition policy. And you can see that in terms of how Alibaba recognizes their China commerce business, which is the most profitable and the biggest arm of the entire Alibaba group, you can see this very interesting segment called customer management, or CMR, customer management revenue. So this is essentially the advertising business of Alibaba, which basically accrues most of the earnings and margins to Alibaba's business. And if you were to really compare in terms of margins, JD has razor-thin margins similar to Amazon, because how they recognize revenue is by recognizing the entire product revenue. Let's say I bought this keyboard for $180 and the cost of the keyboard is $150 or $160. So that's why my margin is probably closer to, let's say, 10%, 5%, sometimes even borderline 1-2%. So that's how they recognize their revenue. But in Alibaba's case, even though they move so much products, they don't recognize the full $180. They probably recognize the merchant that is doing all the advertising, and yeah, only that advertising revenue. And also by extension, why I'm arguing that Alibaba in substance is actually an advertising platform. So I think to further illustrate the point, I'll pull out this Excel sheet. So I know some of you long-time viewers are probably quite familiar with this Excel. It essentially kind of shows you the trend of how Alibaba is growing over the last 4 years or so. So I started recording since 2019, and you can see that in terms of the overall growth rate, it's essentially the second row, right below the consolidated revenue space. You can see that in terms of revenue growth in 2019, Alibaba actually grew extremely healthily, 30 to 40% growth, 30, 37, 22%. And then in 2020, it started slowing down, but still considerably strong, 33%, 30%, and even 63%. And in 2021, that's when you'll probably start to see signs of cracking. So yes, the first 3 quarters still very strong growth, 29 to 30%, but then in Q4, suddenly it went negative. And in 2022, it was essentially when all hells break loose. So you can see that negative 3%, just positive 2%, positive 2%. And this was essentially the year where the Chinese economy was slowing down, tech regulation and stuff like that. So you can see that, hey, actually Alibaba's earnings is extremely telling of the Chinese economy. If the Chinese economy is booming, you can see that in terms of ad revenue, in terms of how they recognize many of their growth rates, is astronomical. But when everything comes to a screeching halt, when economy is doing badly, you can see that it's directly impacted them as well in terms of the top line and bottom line. And of course, you can compare to Tencent, but Tencent, in the grander scheme of things, it's the green line here. It's around a 3% global market share, while Alibaba is around 9.5%. So of course, Tencent is going to recover a lot stronger and a lot faster because it has a much more diversified portfolio. But of course, if China is doing badly, I don't expect Tencent to do very well as well. So I think to also give you more flavor and more understanding in terms of the contextual understanding. So if you were to really reference back to Alphabet, Alphabet, in this case, is the king of advertising. Meta Platforms is probably the queen of advertising. And you can see that when everybody is touting for a US recession, everything is going to slow down, advertisers are going to pull back their budget. What's going to happen to their growth rate? So just take a look. In terms of 2021, 2022, they're still growing healthily, 20-30%. And we go into 2022, I'm just going to zoom in and to show you a better expectation. 12%, 6%, 0.96%, 2.6%, 7.06%. And this is a year-on-year quarterly growth. And I think Alphabet was still the better faring one. Look at Meta Platforms. Meta Platforms had several quarters of negative year-on-year decline. So 35%, yes, good in 2021, started slowing down 6%, negative 0.88, negative 4.4, positive 2.6%, and then now it's slowly recovering to 11%. So of course, if you're going to compare to our US counterpart, a lot of people are saying that, the recession is cancelled. But at least I think, at least for our Chinese counterparts, it is slightly trying. The economy is experiencing some sort of transition, and there is some issues in terms of expecting advertiser spend to come back again. But I think all else being said, especially if you agree that Alibaba in substance is actually an advertising company, you would expect some sort of cyclicality to its growth rates. And we are experiencing in real time how the cyclicality is playing out. Personally, I do think that Pinduoduo is also in the advertising business in terms of how they recognize their revenue, but there is a limited mind space and limited number of people in China today. And if you want to advertise, there is a reason why people want to advertise on Alibaba compared to many of its smaller counterparts. Sure, they might be a lot more cheaper, but there is inherent advantages, particularly so when you're in the e-commerce business. And when you really look into Amazon's recent earnings report, the advertising revenue specifically, Amazon is slowly playing catch up, as you can see here. Amazon used to have a very small market share, and Amazon, because of the inherent business model of an e-commerce platform, the cost per click and the mind share of the consumers on their platform is vastly different compared to someone that is trying to target on Facebook or target on Alphabet or Google, for example. So which is why I do believe that inherently for e-commerce businesses that are in the advertising business as well, there is a fundamental mode to it. I'm sure many people are complaining that, look at TikTok, look at Pinduoduo, everybody else is growing rapidly and Alibaba is just slowing down. I think in terms of slowing down in GMV, I doubt so, because if you were to really plot the graph in terms of how much Alibaba moved products in GMV growth, it's still growing at a very healthy clip, but it's not translated to revenue. It's purely because how they recognize their revenue. So yes, but I do agree that the competition is heating up, and I think both TikTok and ByteDance is spending crazy amount of money to do user and customer acquisition. So that's that. But I think I just wanted to kind of point out the very important factor that people tend to forget, especially when you compare companies like TikTok or ByteDance in this case versus Alibaba, which is pure play e-commerce platform. So a tweet from Rui Ma said that ByteDance's Douyin, aka Chinese TikTok's shelf e-commerce products, apparently reached 1.6 billion daily page views now, 167 million daily active users, 5 to 6 million paying users daily, conversion rate of around 3%. But some users do complain that it's too much e-commerce content now. So there seem to be trouble converting short video creators to live stream salespeople. Makes sense because one is creative, goofy and entertaining, and the other needs to be much more well-researched and run a real business. So which is why there is still a fundamental difference and nuance in terms of these different businesses. Yes, they are all trying to attract advertising dollars and trying to attract all the attention to their platform, but there is key differences in how they operate their businesses. I'm not saying that TikTok is not able to transition or transform itself to become a strong e-commerce player as well, but I think we have to recognize the fact that they are different. So do leave in the comment section down below, what do you think? Do you believe that Alibaba is an advertising company at its core? With that, I still remain optimistic in terms of the entire Chinese consumption recovery, and especially so when the multiplier effect kicks in and the Chinese economy starts booming again. With that, I'll see you in the next video, but more importantly, I'll finally see you on the moon. Goodbye!